Market capitalization, weighted or total versus free float. You can say weighted, you can say total. It's essentially the same thing. Weighted market capitalization considers all of the company's outstanding shares and is a common measure used to describe a company's value. So when you think about considers all the company's outstanding shares, that includes the tradable float, the tradable shares that are on the tradable market. That includes restricted shares as well, either from workers or investors that can't sell, but they have stake, owners, CEOs, board of directors, and whatnot. Free float market capitalization considers only shares that are considered to be freely available for trading in the market and is a common measure used in index weightings. Free float market cap takes a market cap and subtracts for shares that are unlikely to be traded. This typically means subtracting shares that are held by officers, directors of the company, those held by another publicly traded company, and those held by certain other entities. They're just not in the tradable float at that time. Doesn't mean they can't be tradable at one point in the future, but right now they're not a part of the free float. They're not free. Most major market cap weighted stock indexes like the S&P 500, Russell 2000 use free float market cap in determining how large of a weighting to assign companies. So when you go on brokerage websites, the brokerage apps, really anywhere, when you see that market capitalization, that's going to be the free float. They don't consider the restricted shares, the ones that aren't in the actual tradable float. And that goes for indexes as well. It's the most commonly used one. So when most people say the float is this, the market cap is this, they're using free float. The free float method provides a better and more accurate reflection of the market movements and the stocks readily available for trading. In addition, in the case of a free float market capitalization, the resulting market capitalization is generally smaller than what can result in a total market capitalization method. So yeah, for example, another stock I'm in, Labor Smart Inc. LTNC, about half of its float is actually tradable. About 8 billion shares, it's a penny stock. About 8 billion shares are tradable, but overall it's looking about 15 to 16 shares in total. But those are on the restricted side with the officers, different directors, and people who have restricted shares for payments. So right now, only the tradable float is about 8 billion. So the price right now, the market cap right now is about 50 million with that involved. But if you add in all the shares, the restricted shares is about 100 million market cap. But for my purposes, when I talk about the stock, it's going to be free float, and I'm going to be going off that. Most of the stock exchanges worldwide use free float market capitalization method. It helps them to eliminate the impact of the private or locked up shares reflected in the market. Moreover, a free float market capitalization is inversely proportional to the volatility in the market. Therefore, a higher free float value suggests that investors are trading shares quickly. Similarly to this, a low free float signals greater volatility. So the smaller the float, the smaller the float you see on an app, the more volatile it can be. Restricted shares provide employees with a stake in their companies. However, they have no value until they vest. That is until a waiting period is over or a company milestone is met. So I'm going to go back to LTNC, another example. The company paid a lot of workers in shares, right? And so there was a vesting period. One of the vesting periods was the company getting pink, getting tradable, and another vesting was time after getting pink. So now a lot of people who were paid, their shares are coming into the market. Now that does not mean they sold their shares but it still does affect the stock price because it's a bigger boat per se. It's wider now. Vesting gives employees an incentive to perform well and remain with a company. The vesting schedule a company sets up determines when employees acquire full ownership of the asset. In this case, restricted stock units, RSUs. As soon as the restricted shares become vested, they are added to the free float market cap as they now hold tangible value. Now, if you look at the bottom, we have a free float market cap used by indexes, 333 in English ordinal. Very powerful. One more time, a free float market cap used by indexes, 333 English ordinal, and we have free float market cap is widely used, 331 ordinal and 133 in English reduction. So we have those 33s when you use the parent number where we could just cast out the 1, and you have 33. So that's very important to terminology reasons wise. If you need to know the difference. So what you see on the apps, on the regular websites, when it comes to stock weights, it's going to be the free float. So whatever Coca-Cola's market cap is right now, that does not include the private, the restricted shares, the RSUs, or nothing like that. So understand that now.